price action is one of the most powerful but commonly used aspects to technical trading. And in today's video, I'm going to give you guys an introduction into how to use price action to master the charts, to make money in the Forex market using the price that we're seeing in real time. Now, what I'm showing you here right now is basically what we're going to focus on in this first episode. The first thing to identifying profitable price action setups is understanding the flow of the market. What we're looking at here is a trade that I have on as we speak on the euro against the Canadian dollar. Now, I'm looking at a 1 hour chart, but what I'm talking to you about today can be employed on any time frame. I'm talking all the way from the 1 minute time frame to the monthly time frame. Today, we are talking about how to understand flow in the foreign exchange market, specifically talking currency pairs. But again, these concepts can be applied to any time frame and any chart because price action is universal. This is a powerful thing that new traders need to understand. When we're talking price action, price is just understanding what buyers and sellers are thinking, doing, and putting their money on when it comes to the chart that we're looking at. So when we look at the euro-CAD, I want you to think about this. What do we see happening here? What is the flow of this market? Obviously, there's a lot of red on the screen, and I'll explain that in a second, but it's probably pretty obvious that the flow of this market is to the downside. So without thinking too much on this, I want you guys to think in your own head, what would be the natural next step for this market? Would we expect price to go up from here, or would we expect price to go down from here? And I want to talk about this very specifically because so many new traders, you might think that the answer would be sort of obvious. We would expect the trend to be going down. And I'm sure that many of you have heard the expressions, the trend is your friend until the end, and this and that. But when we actually take a look at what traders tend to do, I can tell you, I've been studying the markets for a while, and I've studied what retail traders tend to do. Typically, a retail trader will look to buy this market with expectations that this market is oversold and it is time to reverse. Me as a price action trader, like I said, I've been trading for 5-6 years now and predominantly have focused on a mix of fundamentals and technicals in my trading, but technicals have been there the whole time. And I can tell you that by studying charts and studying price action for a long time, it is very, very common for new traders to look at a chart like this and to anticipate a move in the upward direction, thinking that the market has gone too far. What I'm telling you here today is understanding the flow, is getting rid of those implications of the market's going down, so it should go up next. The market will do what the market wants to do. And a lot of times the market is hunting stop losses. It is hunting, people who are trying to essentially call bottoms and tops. And very commonly, the flow of the market is going to likely continue in the direction that it's headed. It's not always the case, but I can tell you guys, and I'll show you here in just a second. This is a tool that we use. I want to show you something with euro-CAD. So this is the A1 Edge Finder. This is our proprietary market scanner that our team here at A1 Trading has built. In this video, I'm talking a lot about price action. I wanted to cut in here for a second and let you know that we have a free PDF download available all about technical trading strategies. If you're looking for price action based trading strategies that you could literally read through and try out for yourself, we have a free PDF available for that. If you'd like access to that, down below in the description, there is a link to send a Telegram chat message to one of my team members. If you would like to do that, click the link down below in the description, and then it'll take you to a conversation with one of our team members here at A1 Trading. Send them the word technical handbook, and they'll get you hooked up for free. Okay, let's pull up euro-CAD. I want to show you guys this for a second. So what I mentioned is that when the market is trending lower, we tend to see the retail crowd going long. And I'm not saying that from just my pure opinion. I'm going to show you that historically speaking, that's what we see. Okay, so this is a look at the A1 Edge Finder. This is our tool. And what you'll notice here is, look, exactly as I was saying, retail sentiment here, which we use data imported from another site, we basically take a look and we see that retail sentiment on this pair, according to the positions placed from retail traders, is 74% long. So as this market has continued to trend down, what we've noticed is that the retail crowd is buying, whereas there is a much smaller portion of the retail crowd that is shorting. And the reason that I tell you that is because so many new traders, when they jump in, that's their first reaction, is understanding, oh, the market's down, it's time to buy it. What I'm going to try and tell you guys is in my years of experience, it is so much easier to just go with the flow than to try and erase the flow or go against the flow. So that's the first thing I want to understand. Just from a high level opportunity, we as price action traders are going to use price to make a decision. And when price is trending lower, generally speaking, we are looking for sells. When price is trending higher, we are generally speaking looking for buys. Let me show you the next thing I want to show you in an example of the opposite extreme. Here is a chart where we have a buyer's market. That's what we're going to refer to this as, a seller's market or a buyer's market. In a buyer's market, you want to essentially be looking for opportunities to try and find good buying opportunities in a market that is in your favor. On the flip side of a seller's market, like we just looked at with 𝗀𝗂𝗃, I'm selling this thing. I've been short here since around these areas. Overall, on the higher time frames, we have seen a nice downward trend. I am looking for sells only. There's no reason for me to buy this until there is, signs of a reversal, which we can talk about in a future episode. When we take a look at dollar yen, this is a buyer's market. Until further notice, until proven otherwise, we are predominantly looking for longs. Okay, so when we look at this and we say, okay, well, if we're looking for longs, where do we go long? This is where you start using price action, right? The first step in price action is identifying flow. The second step in price action is identifying areas of value, which we'll talk more about in the next episode here. But just a brief idea is understanding that if a market is trending higher, we are looking for buys. If a market is trending lower, we're looking for sells. Now, I want to show you, follow up with my thought process just to show you this. Dollar yen. Let's go back the idea here with the stats. We take a look at dollar yen and we see retail sentiment. The exact opposite extreme is happening. We see that retail traders are 76% short on this market. That leans us towards wanting to be a buyer. Now, when the retail participants in a market are heavily stacked on the short side, what we very commonly see is the market continuing to trail higher and to continue to take out stop losses. A very common response to a market trending up like this would be to do something like this. There's a selling point, right? This is resistance or supply or whatever you'd like to call it. The reaction at this level from retail traders is overwhelmingly to sell this market, thinking that because we have reached a high point, the price is too high, and we've hit into a level of supply, we're going down from here. That's a very, very common response. And as traders, you have to understand that if this was easy, everybody would be doing it, right? So this stuff is not easy. So if you understand that the retail crowd is typically going to be trying to short into this area, thinking that, hey, we've reached too high, it's very, very common for a market like this to continue to rally past that level and to take out the stop losses of retail traders who are losing money. It doesn't mean that this market will continue to go up forever. What it means is that more than likely, retail traders are going to get hurt trying to call a top. And we see this story happening again and again. And I want to show you some more examples. If we take a look left, this was not the first time they got hurt doing this, right? There's probably over here. Here's an area where retail traders, a common response would be, hey, look, we've got a supply zone here. When price comes up to this level, what do? They sell with stops above the high. And sure enough, the story continues. It happens again and again and again. And what this leads to is, unfortunately, a very, very low participation from retail traders in strong trends. Strong trends, as we're going to find out later on in this price action course, are the foundation of very profitable strategies, in my personal opinion. Strong trends are the basis for most losers in the market to lose their money. And I don't say that in a way like, oh, screw the losers. And I'm not trying to be like rude to people who are losing money. What I'm saying is that generally speaking, we know a very common pattern in Forex. We know that losing traders tend to hold on to losers. And from my experience, winning traders tend to hold on to winners. If we can re-engineer the common practice of retail traders, which is to sell here and to hold until the account blows up here, right? This is the blowing of the account point. This is where things go bad. If we know that that is a very, very common trait to the retail trader, it may be in order for us to consider doing the exact opposite. which is the foundation of my trading style, basically re-engineering and doing the opposite of what so many of us naturally do, which is we try and sell high, thinking that we've, reached a topping point, and we hold on to losers stubbornly until they blow the account. The problem is, if you catch one, the thing is, like for example, many traders will use no stop loss. They will say that, every time the price rallies, let's say that they sell here. So price pops up, they sell here and they take profit. They made money, right? Then the market rallies up. They sell here. It goes against them, but eventually they make money. But then they sell here, thinking, hey, every time I sell and the market goes against me, it comes back and I'll be fine. But then it just takes one time where the market does not come back. And then sure enough, the market continues to go against you until the account is blown. If this has ever happened to you, let me know in the comments down below. It's a very, very common story. It's a bit unfortunate, but it's just the reality of the market. So many times has this happened to so many traders. I'll give you an example. Euro-Aussie during 2020. Take a look at this market for a second. If we go look at the 4-hour chart, this is an example of an extreme account blower. This market just went parabolic to the upside as people favored the euro over the higher risk currency, the Australian dollar. They bought the euro like crazy during the pandemic. And this thing in February of 2020 started going up, and it did not cease to go up for several months. And it just went like a straight and arrow to the upside and blew accounts the whole way up. So understanding flow is understanding that the path of least resistance is trying to go with the river, not trying to go against it, right? So when we look at something, for example, like let's take a look at the dollar, right? The dollar, for a long time, we have been very, very much bullish on this, okay? And a simple way to identify flow, very common. I know it's, just a retail strategy, which sometimes people have an issue with, but moving averages are just moving averages. They're a very simple way to identify flow in the markets. So we're taking a look here at the 20, the 50, and the 100 period simple moving average applied to a 4-hour chart. And what you can very clearly see is that when all three are lined up, this is very common. I know you've probably heard this on YouTube before, but if you're a new trader, the idea here is that when all three are moved in the same direction, that is identifying a strong level of flow. And sometimes it's as simple as understanding that a change in that nature could lead to a change in the direction of the trend, or at least a consolidation period that makes trading less favorable. Being long during this time yielded excellent results. Being short during this time has yielded some pretty good results as well. But understanding that a trend, you can't hold on to a trend too long, but you also can't fight the trend, right? Because if you fight the trend, it can be very, very ugly. If you were shorting the dollar here and just held on to a loser, you probably would have been in a lot of pain. So identifying flow for me is as simple as using simple moving averages, using big key breakouts, identifying levels like this. When that broke, that was a clear signal of demand, a signal of flow. We as traders need to go with the river. We don't need to fight it. And identifying simple moving averages, big breakouts, that is stuff that we're going to be using to try and find and identify flow direction in the foreign exchange market. So with that said, we could take a look at, for example, AUD/USD. Here's one that has recently changed directions. And again, flow can go down, flow can go up, flow can go sideways. Understanding the flow of the market can change is important, because you're not going to be guaranteed that just because you sell in a down market that the market can't change directions. The difference, and the part two to what we just talked about, many traders hold on to losers, right? We as flow-based traders, price action traders using the markets to identify when flow has changed, we need to understand that losses are inevitable, and not only are they inevitable, they're guaranteed, right? You're going to take losses, and that's totally fine. But what matters very, very much is that when we are wrong quickly. You cannot hold on to a loser. That is going to be rule number one in my book when it comes to trading. You cannot just hold on aimlessly to a big loser. Your strategy as a price action trader to me is, if you're wrong quickly. If you're right slowly. And I'll say that again because it's very, very important that you get this, guys. To me, as a trend follower, as a price action flow-based trader, when I am trading and I am looking for a setup, I am looking to be wrong quickly if I'm wrong, right? If I'm wrong, I want to be quickly out of there. And if I'm right, I want to be very patient and hold on to a winner for max profit. Okay? And max profit is not greed, it is patience, because it is very, very hard to hold on to a winner. We mentioned earlier that it's very common for new traders to hold on to losses for a very long period of time. It is very, very hard for new traders, myself included, I'm speaking from experience here. It's hard to hold on to a very good trade because you want to bank that profit. You want to take your money out and you want to feel like, hey, I've made a win here, right? Because so often have I taken a trade where the market goes in my favor and I feel very good, and then it comes back to break even. Has this ever happened to you? It's very common. It happens to me all the time. Unfortunately, there's no getting around that completely. However, in order for us to have the occasional massive winner, we have to experience small losses, break evens, and all the in between until we finally catch good winners. We'll talk more about how you can catch big winners and entry points, as well as demand zones, areas of value. We'll talk about that in the next episode, which should be appearing on the screen now. Thank you very much for watching today's video. If you enjoyed, make sure to hit the thumbs up button, subscribe, and see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.